Hey guys, I hope you had a really good long weekend. I was actually looking at the market today during lunch and I realized that there was something happening that I think we can use as a good learning experience. You're watching Sekido and today we're learning about ex-dividend dates. In short, an ex-dividend date is the date by which you need to own a stock to receive its dividend payout. Some companies pay dividends quarterly, some biannually, and as is the case for most of the high dividend payers in Korea, annually. Now, if we look at the market overall today, we see that it's consistent with what we've seen over the past few weeks. But if we take a closer look into the sector information, we see that specific sectors sustained heavy losses across the entire sector. Now, if you're new to the market and maybe seeing this happen for the first time, don't freak out. I can tell you why this happened. Now, for active investors who both seek growth and dividends, there's no reason to stay in a stock past the ex-dividend date unless it's expected to grow at a higher rate than the rest of the market until the next dividend date. In the case of these high dividend yield stocks that pay yearly, it may actually be more lucrative to sell out of the stock after the ex-dividend date, chase the growth of the market for the bulk of the year, and then buy back in around November or December and capture the dividend for the next year. Now, if we click on Kiop, we can see that this trend occurred very clearly over the course of the past few months. In September, there was middling interest, and then a slow upswing in October as the ex-dividend date neared. Then we had sustained growth in the stock price over the next 2 months up until yesterday's ex-dividend date. Now, if you're in these companies for reasons other than the dividend, there's a good chance that you have no reason to panic at all. Generally, there's little reason to panic on down days overall, but today might even be more special. See, with all these new players in the market and many of them joining since the beginning of the pandemic and since we realized that we wouldn't be able to spend our money out in the wild anyways, I feel like seeing the prices drop today may have sparked fear and led to a larger sell-off than usual. This might actually be good news for you because if you believe in these companies and aren't interested in chasing gains across the market for the rest of the year, it may be a really good time to look for bargains on companies that are being sold for reasons outside of their fundamentals. Diamond hands, my friends. Remember what Charlie Munger said. The stock market is a voting machine in the short term and a weighing machine in the long term. If you're buying companies because you believe in them and you believe that their fundamentals are strong and that you can make money off them in the future, and that you're actually investing for long-term growth, then when you see stuff like this should make you happy because it gives you the opportunity to buy at a discount. But once again, make sure that if you're buying these stocks, you actually know what's going on with the company. Alright, I have an actual episode for you coming up later on in the week, just before New Year's, but I wanted to do this today because it seems timely and it makes sense. Also, I don't want you guys to panic because of something that you may not have known about, but is very explainable. Alright, if you found this video helpful, please like and subscribe, and then also maybe click through and check out some of our affiliates like Hanggang Magazine and This Korean Life, both of which we have linked in the description box below. Otherwise, we'll see you next time. Take care, be safe, and hope you had a happy Christmas.